Today is Saturday, the 27th of March, 2021. We had a pretty wild week for stocks. The Russell 2000 and the biotechs lost a little bit of ground, as did oil, but everything else was up higher. The closing numbers, of course, don't tell the full story because we saw a lot of volatility. Let's move over the S&P 500. I had pointed out on Twitter on Thursday, mid-morning, that the buyers had showed up right at the year-to-date volume-weighted average price. That's a level I've mentioned numerous times, and that's exactly where, again, the buyers showed up. So on the 30-minute time frame, here's what it looked like, and then of course when we drill down to shorter term time frames, we can see where the buyers really found that control after they tested the volume weighted average price for the day later in that afternoon. And then of course on Friday it was very choppy until the end of the day. One thing that you see a lot of times in when the market's below the declining 5-day moving average like that, oftentimes what we see is it gaps up above it and then continues higher for the day. In fact, I posted this several times over the last decade, that this is kind of what we see happen a lot when here's the 5-day moving average in the market. When the market gaps up above that 5-day moving average, we then look to the shorter term time frame, and we often see that it gaps up, reclaims VWAP, and then goes and finishes higher on the day. That's something I had posted Thursday evening on Twitter. So the opportunity to recognize that the market was turning was obviously there. And as I've been pointing out, the pattern on the daily time frame is still one of higher highs and higher lows. We have all these longer term rising moving averages, and the buyers are simply in control of the long-term trend. When we're below the declining 5-day moving average, I don't suggest that people buy the dip, because the dip can keep on dipping and dipping and dipping. And some great examples this week were in some brand name stocks, basically Viacom, CBS. I mean, this stock had a phenomenal run this year, going from 35-ish up to 102, 103, and in the space of 4 days it dropped from 102 all the way down to under $40 per share. If you're buying the dip, where do you buy it? Do you buy it here at the 20-day moving average, or did you buy it at the 50-day moving average, or were you waiting for the 200-day moving average? It simply doesn't make sense to buy into this type of weakness. Buying the dip is an uneducated way to try to make money in the market. The NASDAQ still really in a choppy range here, also still stuck below the declining 50-day moving average, that's up here. The declining 20-day, well, it's actually above the 20-day, but we are below the volume weighted average price for the year. So a little bit more neutral on the NASDAQ altogether, just because it's been so darn choppy. Really not a lot to read into that. As you guys know, I take each stock based on its own merits. This week on Twitter, I had mentioned shares of Box, for instance, and Box took off very nicely out of this little consolidation that had been pointed out, and had a very nice run. I've been talking about Twink, Hostess, as a potential short squeeze candidate, and it's not ready yet. What we want to see is probably a move above this level. It's got a big short position. I think it deserves one because it's Hostess cut cakes, and I don't eat them, but who cares what I think or eat? The market is the sum of all opinions, and right now it's just a little bit early in there. I did point out CYH, and I said with a stop under here, I didn't even buy the stock, and it ran 18% on Thursday. The point is, there's still opportunities out there. The Russell 2000 still showing a pattern of higher highs and higher lows, believe it or not. Even after that big decline, we didn't breach the previous higher low. So the longer term trend is still intact, and that is an uptrend. Now, of course, we're seeing a lot of volatility in the Russell 2000, and you can see we made it right to the 5-day moving average. Next week, what I'd like to see is maybe some further consolidation, a little shakeout, and then be able to turn higher again. But you've got to be impressed with the bounce that occurred, and you can see the biggest volume occurs typically at turning points, and we saw that once again. Some of the stocks that I mentioned for subscribers on Friday, well, we'd already been in AT&T, so that one's working. But I'd mentioned BCEI. Unfortunately, when I talk about these stocks, I don't just say buy them. I wanted to see it pull back a little bit and then buy it. So that one unfortunately didn't trigger. It was up 5%, but it didn't trigger for us. BRKB, I put this one on Twitter on Thursday night as a potential candidate as it breaks above that volume weighted average price from the peak. DHI, Dr. Horton, was a beauty for us as that broke some weakness. What we were actually looking for and we got was a little bit of a pullback, and then we want to buy as it gets back above the flat to rising volume weighted average price. So Dr. Horton up 4%. Federal Express just digested these gains and started moving again on Friday. Paychecks was another one that was a clean break higher here on Monday. We got a slight pullback to 98. That's exactly what we're looking for. And then it ran 2.5 points from there. And finally, UEC is another one. This was a straight buy above these peaks here, a low price stock that looks like it's still got room to run. The biotechs, as we know, they came down close to that rising 200-day moving average. And this market on Friday was only up 30 basis points. You compare that to set 5% in the semiconductors, 2% in the Russell 2000. So there's still clearly pressure in the biotechs. But what you need to notice here is the structure. The structure is we've been finding supply sellers at the year-to-date volume weighted average price. Initially, the year-to-date volume weighted average price found buyers. That flipped to sellers, and from there we saw that large sell-off last week in the biotechs. Now maybe they can become a little bit more neutral here, but again, we're still below a declining 5-day moving average, and for instance, you wouldn't want to buy it on Monday above this high simply because it's just run from 146.5 to 149.5. I'd rather see it pull back, make a higher low, and maybe in a couple days, if that 5-day moving average starts to flatten out, then you could consider it for a long side trade. This video is sponsored by Microsectors. If you're not familiar with them, they have a 3 times leveraged banking product. So if you're looking at the financials, and that is BNKU for up and BNKD for down. So whatever the financials are doing, which they recovered as well, those leverage products will do 3 times the amount. Now they're only for sophisticated investors because there is a lot of risk in them. But so far we see that the financials found buyers right at the volume weighted average price from that prior low, and we're starting to see again buyers are back in control. If we take a look at the volume weighted average price from this peak, you can see that we recovered it. It held as support here late in the day on Friday and then continued to rally. So there's still tremendous opportunity out there for swing trades. That's what I specialize in for subscribers. I do this every single day and identify new stocks. Sometimes they're stocks like Berkshire Hathaway. Sometimes they're little uranium companies. We're not looking for longs. We're not looking for shorts. We're looking for opportunity. Whatever the market gives us, that's where we're looking, as long as it's a low risk, high probability trade that could be held hopefully for at least a few days, maybe a couple of weeks.